Perfect. All right. Welcome to Negotiation 101. Should we narrate it for him or something, or what? Should we
I
just say?
suppose.
So Chelsea, Adam, and Elvis are all on the MewMate team, and Madison and Griselda and Aaron were on the DuPage side. Sorry, I'm going crazy. So we're going to start our negotiations. We got an email from DuPage that says that they are willing to do a Series A of 1.5 million and a Series B that will total $3 million. So I think we'll start with that, right, Adam?
Yeah, sure, we can start there.
Perfect.
Oh, dang it.
Oh.
Did you guys look at the calculations at all?
Yes.
Yeah.
Okay, because we put in 1.25.
Oh.
Will we fix? Did we fix it on our end?
Yeah, we did. We were looking at the. If you can see my screen, in the spreadsheet it says 1.25.
Oh, okay, because I was supposed to go off the calculations on the spreadsheet.
Okay, so the spreadsheet is accurate?
This spreadsheet is accurate.
Okay.
Okay.
I don't know. Our lawyer says that you guys are bound by this 1.5. Just kidding.
This is still negotiation. I can still negotiate it down.
Yeah, you're right.
Well, I think that this was our first point of the negotiation that we wanted to go over. So I think that we want to ask for $5 million.
You want to ask for $5 million total? Oh, Griselda's here.
Okay.
Hey, Griselda.
Awesome.
Can you hear us?
Hello.
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 Hi.
Are you awake?
I'm not.
Welcome.
You there, Griselda? Oh, it's a good sign. His face is on there.
Yeah.
There. Okay, we'll just continue.
Okay. His baby's there.
Okay, so you guys wanted $5 million?
Yeah.
Okay. So, and did you want it over two series, or all just one big chunk?
I think we can take two.
Yeah, we could take 2.5 one and 2.5 the other. What do you guys think? Does that?
I think that would be okay.
Because if you look at the...
I'm afraid to I'm afraid to look at my stuff. I don't want to not.
That's okay.
Hello.
Hello?
Hey, hello.
Hi, Griselda. Welcome.
I just got a new internet installed, so
Yeah.
Glad you're here.
the guy was taking a little bit long, so.
Well, it works great because you're on here twice.
I know I tried on my phone, so I'm gonna disconnect that now.
There you go. Okay, so Griselda, I sent them the email, and they're looking at it, and they want $5 million.
$5 million?
I
Yes.
know.
No way, guys.
All
Anyway,
right.
what's the reasoning for that? Why do they want $5 million?
Because we know what our product's worth.
Is that your evaluation on that? 5 million?
Well, okay, how confidential are we supposed to be with our stuff?
I think now that we're negotiating, we can let it out.
How do you feel about that, Adam?
Um,
You want to keep it private?
well, it says, I don't know. I mean, I think that everything ought to be on the table. That's me.
Yeah.
But the quote-unquote confidentiality thing is there, so I don't know.
That was just to make our decision. I think it needed to be confidential to make our decision
Right.
for the number that we give you guys.
I think we need to make a correction. We don't necessarily need the 5 million. Is that right? We need the 5 million pre-valuation amount.
Yes.
Yes.
Yep.
So for the Series A, it'd be 5, and then for the Series B, we'd be looking at 10 pre-money valuation.
Which is what you guys have at 3.75.
Okay, well, we'll be open with you guys. The venture capital company, the limit that we can invest, it's 3 million. We
3
cannot-
million?
3 million.
That
We
they-
cannot invest more.
Yeah, that's all we can do.
That they can invest. So all that's going to do is do two series of 1.5 and 1.5, but the pre-valuation money is just how much the company's worth, right?
Right. That's your valuation of what it's worth, so that the ownership percentages change.
Right.
Yeah.
Right. So we figured we'd give it to you over 2, so you guys would get more money in the end.
And your revenues for the 2012, it's about 2.5 million, right?
Yeah.
So that's how we came up with the evaluation on your company based on your revenues. Sometimes VCs, they put a lower evaluation, but we just thought,
Was our revenue part of your confidential information, or was that in the case?
we used both the case and our confidential.
Okay, because I was gonna say I don't remember reading that in the case,
Yeah,
and we didn't have that information. Okay. All right.
Well,
Yeah.
how flexible can you guys be with the pre-money valuation?
Pre-money valuation, that's the numbers that we came up with.
Uh-huh.
And somebody else that did it, they could come up with a completely different number. That's just what we value the company as.
Right.
Off of what we value the company off of.
As long as the post-money valuation on the first round, it's not higher than 6 million, I think we can be okay. That makes sense?
Yeah. I think in order for us to have a good deal, we need it to be the pre-money. Did I read that right? What am I saying? The pre-money valuation, we need it to be 5.
So for the pre-money valuation, we can't change that at all. For any money that we put in for the pre-money valuation, that's not going to change at all. But you guys are valuing your company higher than we are,
Of course.
which,
Yeah.
why wouldn't you guys? But no matter what your pre-money valuation is, if we put your pre-money valuation at 5 million, that's just going to change the amount that we give you. More or less.
Right. So what percentage of the company, what kind of holdings do you guys require?
between 25% and 40.
Okay, so if we're looking at the, I'm trying to.
I've opened the sheet calculation. You guys gonna see it?
I don't know if you can see my. I think the numbers are the same on your spreadsheet. So you guys need 40%. Now on the Series B, at the end of the Series B, it shows that you guys own 49%. No, we own 49%. You'd have 37%.
Yeah, yeah.
Is that 37%? That's negotiable down to 25%, right?
We like 37% though.
You like 37%.
Yeah, 'cause we had 28% in the first round. We want to go up, right? We don't want to go down.
Sure. So what if we made your ownership 25% in the first round, and then we'll go from there?
That's just going to be less money that we give you.
Well, that's why we need a pre-valuation that's a little lower. How about your option pool? How flexible can you be with the option pool?
Well, the option pool, it was between 10% to 15%.
10%, really?
Yeah.
Okay, so if we play with some numbers here, and if we change that to 10%, I think it was like 5,500, 13%, 400. So rather than 700, if we made that 4% at 10%,
Share your screen for
with all other things equal, is that something you could work with right now?
Can you share your spreadsheet?
I thought I was.
I
Yeah,
think
you're sharing the Word document.
Are you sharing the
500,000.
Word document? I am sharing the Word document. I apologize. Let me switch that over.
You guys see my spreadsheet?
Yeah.
So when I change the option pool in Series A in 500, it goes to about 12%, 11.7. You guys
You
are
should change.
or you want to go down?
Put 400. See what 400 does.
It went to 9 point something percent.
Okay. What if we made that at 10%? If you did a goal seek?
What's that again, Adam?
I'm gonna. Sorry, I need to share my screen.
You were.
Oh, I was. Okay. Okay, so if I if I select that percentage, and if I go to goal seek, and if I plug in 10%, 0.1, by changing the value of this.
Yeah.
If you made that option pool 416.62, let's see here. But you're saying the option pool needs to be 10% at the end of our two series, is that right?
We need it to be greater than 10% in Series A.
First
Okay,
round.
so-
Series A.
All right, greater than. So let's just plug in 10.01%. What do you think of that?
I'd be more comfortable with like 11.
Okay. What does the option pool do for you guys?
That's giving shares to other people.
I mean, does that really help you?
If we
In a way, yes, it does help us.
Oh, okay. Not right now, Rebecca.
In fact, if we lower the option pool, we get more ownership management.
Yeah, but if we lower the option pool, that's more money we have to give.
Do we?
Yes.
So let's goal seek that to 11%. Well,
Like
actually,
one of those things that you
the
have to
amount of
think
the
about.
new investment remains the same, if I understand right. It's just the ownership percentages that go up or down slightly.
Yeah. Yeah, you guys are only giving us what you're going to give us. It's just a matter of how much it's worth.
Right. But it will change the pre-money valuation and the post-money valuation on how much the option pool is.
For the next round. So if we put that, I tried to get it at 11%. Let's just change this to 464. So you got 11.01. Next round would be
Being the new invest.
Right.
Not the pre-money valuation.
the new invest. For the option pool?
Yes.
I didn't. I thought the option pool, we're just doubling. It remains the same. We're just doubling its value like everything else.
Series B doubles.
Yeah. So
Every-
there's no new.
For Series
no
A,
new
it's
in-
the new invest. Because
You're
there's no
saying this-
option pool to start out with.
You're saying, is that right?
Yeah, yeah, there should be.
Be-
Your option pool changes in the second round.
Because the new invest is simply the 1250, isn't it?
Right.
Yes.
So
And if you change your percentage to the 11,
because this column just indicates that we're getting money in. The option pool, we're not getting any money for that. Am I right, or am
No, the
I-
option pool, you guys get money from that.
You get money from employees, I think, or something like that, or other.
No, I thought the option pool was just money. It was just a percentage of the business that was set aside,
Yeah.
and so I mean,
No,
this
that's
money
for,
could.
like, dividends and stuff.
It's like
Do what?
share. Giving
It's
share.
like it's shares to the employees.
Right, so that falls under the pre-valuation, doesn't it?
No, because we don't start out with any. You guys
I'm
don't have any whenever we go in to invest.
I'm
When we say we're going to
confused.
invest this, that's the amount that we expect the option pool to be.
Right. I guess I'm confused because if I put it there, it would just mean that our business.
That's how many shares you're going to open up. Or that's the amount of shares that you're going to open up.
Yeah.
Monetary.
Right. Well, it's kind of like if the way that I look at it, the way that I'm looking at this, the way that I understand it, and I might be wrong, but the way I understand it is the option pool is like another entity who owns 464%, or not percent, 464 dollars worth of the company, or million, or whatever it is. Anyway, so there's 11% set aside in shares. And
Right.
it's made available later. We're not bringing in that revenue now, right? The only money that's being brought in is the money that you're investing right now. That's the way that I see it.
Oh, okay.
But
That makes
I could
sense.
be wrong.
The way you're seeing it. No, that's fine.
okay. So if we made the option pool 11%, and if in the Series B that number is doubled, would an option pool of 9.59% be sufficient for you guys in the Series B?
No, we need it higher than that.
Okay, so let's just play with the numbers here. If the Series A option pool is 500, so your option pool would now be 10.26 in the Series B round?
I think I'm going crazy because you're typing and nothing's changing.
Yeah, nothing's.
I'm typing, nothing's changing.
Yeah,
No.
I mean, I still see.
Ownership for Series A is 9.64%.
What is the deal here?
Yeah.
That's funny.
Because you're like doubling something, and I see 400, and then the double was 1,400, and I'm like, that's not double.
Okay. Have the numbers changed?
Yeah.
Yeah.
Okay, for some reason my screen share froze. What I was sharing froze. So I changed the pre-valuation in the Series A to 500, puts the ownership at 11.776%, and this number simply doubles.
Right. That just
that.
doubles across.
So it's 10.26.
Yeah. That works.
Okay. And that works for you guys.
Right.
Okay. Well, how much more should we disclose? Do you think we ought to lay out on the table our other options, Chelsea, and see if they're willing to work with us?
What are you guys trying to work towards?
I think the only other one was Maxwell, right?
Yeah. Do you want to propose that?
Yeah.
Yeah.
We know we would like to propose that Maxwell stay on as CEO.
You proposing that he stays as the CEO?
Yeah.
Yes.
We didn't see anything in your proposal suggesting anything about CEO positions, so we thought that it probably wouldn't bother you.
We're not against him being a CEO. But we would like to have that not permanent. You know, like if things go wrong or things need to be changed through a voting process, we would like to have
I
the
think,
CEO changeable as well.
yes, I do think it should be changeable. I think we should have input, but that's kind of why we put the board how we did.
Oh, with the three co-founders on the board.
Right. I think the three co-founders should be on the board because they're the ones that started the company. They have more ownership of the company, as well as Rodriguez is going to be on the board as a voting member. Cantor's not going to be a voting member. He's just going to go in and listen.
Right. And then we get to pick that other that.
The independent director.
Yeah.
Yes, and that person's going to come out of the option pool.
The person's coming out of the option pool.
One of the people, or
Independent,
yeah.
like investor or something like that.
Yeah.
So do we get to pick that person?
That'll be part of the voting board, so we'll all pick together.
But right now we've got the majority, so...
Yeah, so we have the majority, so we'd get that anyway.
Exactly.
Okay.
All right.
What else did we want? Oh, we wanted lunch. That was part of it.
Well, because
You guys-
you pay lunch first, and then
Yeah, we'll buy you lunch.
And Madison will send us some Zoe's Kitchen.
There we go. You guys can write it off. It's a business expense.
Exactly.
Yeah, at least half of it or something like that. Anyway,
I mean, if we got our option pool,
uh-huh.
and we got 25 in the first round and 25 in are we getting the 5 million?
No.
We're getting 3, right?
Total.
Right.
So is it one for
Or it looks like
0.5
0.5
for series?
Yeah, Adam, will you?
2.5 million.
For series A?
Well, isn't in the new invest? Isn't that supposed to be 1.5 in the VC1?
No, actually, they made a mistake on their paper. The Word document that they sent in, they said 1.5, but the spreadsheet had the correct numbers. So,
I see.
is that 2.5 going to be sufficient?
Well, it's actually going to be over time
Right.
because it doubles in Series B. It's going to turn into more money. It's going to double. So
Right,
really,
well,
you're getting
You're expecting
what you're asking for.
the value of our company to double by the Series B, and then you're going to give us
Correct.
another 1.25 million.
yeah, we expecting your company to double. So,
Can you guys still hear me?
Yeah.
Yeah.
Okay. I wasn't sure what microphone I was using. Well, I think that we're. What do you guys think?
Are you guys happy
Elvis?
on your end? I
Oh, hold on there.
Is there any other concerns you guys have on the term sheet?
Actually, I need to.
Terms or something?
Need to look at something here.
do. It's kind of hard to talk ESP, you know.
Yeah. Um. Um.
I think one change we need to do, Madison, because we are investing in each round 1.25. It should be like
1.25 million.
the total will be 2.5 and not 3.
Right.
So we need to change that.
Yeah, I know.
Yeah, isn't the pre-money value, wouldn't that be 1.5 if it was going to be 3?
I wish we had Kyle with us, eh?
I know.
Where did you go? Did you leave the class?
Oh, this elusive Kyle. I've never met him.
He had a lot of experience in investing.
Oh.
That's what he did for work. So he would help us explain more.
Hey, Adam, I really do think that those 1.25s need to be 1.5s, right?
1.25. You think they need to be 1.5?
Yeah, down in the VC1. Right?
Well, in the screen that I'm sharing, I've got it at 1.25. You're saying they need to be 1.5 for our numbers to be where we want them to be?
Well, yeah, to be at 3 million. Right?
Do we need 3 million?
Yeah.
Are you sure?
I mean, we wanted
Yeah,
5, so 3.
Okay, I am looking at that again. I was pretty sure that we only needed 2.5.
well, we only needed 2.5, but they were going to give us 3 million.
Right. The only problem with that is the more money they give, the less ownership we have.
Oh, gotcha.
So if we were to put 1.5 here, and if we were to put this at 3, okay, that's 1,500, 3,000, and this is another 1.1500. That puts our ownership at 46%.
Okay, never mind.
So unless the pre-valuation was changed, the option pool was changed, I don't think that we want to do that.
Okay.
So, do you think these numbers are good? I'm not completely satisfied. I mean, we could get some more icing on this, but I think that we'd probably survive.
Something else you guys get from us as well is professional expertise as well. So we're just not getting expertise from you, but we're going to help you on the business as well. So that's a plus you guys have.
Okay, but we do have other options
Yeah.
that I don't know if you guys know about.
2 other options.
We do have two other companies who are willing to,
Yep. Whose offers are good.
and they value our company much higher.
Yeah.
Yeah, but are you going to be able to work out with them? Are they going to
Definitely.
give you too much money
Are they going to give us
and
too
your
much money?
company doesn't do well enough?
No. No, in fact, we would have 71% ownership or 52% ownership.
But do you get another professional to help you?
Yes, we still have the board members that we need on the board.
Yeah, basically we've given you most of the things. You're like in your position, in your side than we have. We're just getting the equity part, but the other parts you have, the more people in your voting board, you get the money as quick as possible. You get our expertise. So
Oops. What do you think, Adam?
Well, my biggest concern here is that these other, like you say, these other venture VCs, that they value our company a lot higher. Even the one that's willing to.
Yeah, even our
I mean,
our not so good one.
yeah. I'm just wondering how much we can disclose here. I don't see why we couldn't just
Yeah.
tell them. I mean, we've kind of already negotiated. I don't know how much farther we can go. It's already almost 9 o'clock or
Yeah.
9 o'clock
And
my time.
earlier, Grizel said that the valuation of our company is based on sales and growth over the last 3 years. But if you look at what the company has done so far, we've grown and we've generated enough revenue. And there is huge potential for even more growth given adequate investment in the company. So I think that your valuation of our company is a bit lower than it ought to be.
I second that, absolutely. So we've got one that looks like is valuing us, our pre-valuation of, you've got 2,500. This person, or this firm is valuing us at 4,500. And the other firm at 7,500.
Yeah.
So,
how much money you getting from them though? That gonna help with all the demand you have? You're gonna like plan on going the other pace and spend your
Yep.
budget?
Yeah, if
both.
you want to value your company at a higher amount and pay more taxes, that's fine.
Uh-huh.
But we also get a higher percentage of our ownership in that.
Yeah, sure.
I mean, they're valuing it at 7,500, and they're only giving us 3.
You know, a lot of times when a business wants to, a customer goes into a business, they say, hey, this is what the competitor's offering. I don't have a problem disclosing this information to these guys so that they can try to match or beat them. Is that cool if I share my screen with just the spreadsheet?
Yeah.
Okay.
Yeah,
Why don't you
it's not
guys
bad.
check this out? I mean, the more we talk, the more we're going to discuss these numbers anyway.
Yeah.
So that's what we've got. Do I need to zoom in anymore?
No, you're good.
Okay. Okay, so what we've got is Astoria, and we've got Prosper, and then we've got you guys. And we've got pre-valuation.
So, and Prosper, if you look at it, they're only giving us in one series, 3 million up front.
Yeah. And Is Astoria, are these numbers correct for Astoria?
I'm pretty sure.
Double check those.
Let me make sure. I'm afraid to click on stuff on my computer. 75.
Oh, goodness. I need to do this on my other screen so it's still for you guys.
75. 18. Yeah, I'm pretty sure. That's what I
How
have.
about, is the VC amount for the two series, are those correct? 1250 and
Yeah.
250?
Yeah.
So the total was, okay.
Well, it was dependent on whether or not, remember, if we...
Right, but that was dependent on our, as long as we were,
over our EBIT.
yeah.
So seems like you guys got good numbers from the other companies,
Uh-huh.
and you probably have on the board. Did your confidential information say anything about how your board of directors can be like?
One of them gave us...
In both cases, our characters were satisfied. So,
Yeah, they gave us our board, the numbers that we needed for our board.
yeah,
Yep.
we had controlling share. I mean, we were happy there.
And do those companies have experience? Did they have previous companies that they invested?
Yeah, Prosper is doing well.
Yeah, especially well.
Because we have had other companies as well that we invested, and they've been really successful.
Yeah.
So what I'm looking at, bottom line here is for Prosper, it looks like our ownership would be 52.5%, whereas with you guys, I didn't update this spreadsheet here. I need to pull that up. It's not on the right page. I'll move those numbers over. 25, we were talking 500, 1250, 514, 25, 1, 2, yeah. That's not right, 49%. Wrong numbers. 25, 1250,
You just
5,
need to change the pool right there. Yeah, to 1,000.
yeah,
I mean, sorry, 1,000,000.
there we go. But we're at 51% here, whereas we're Prosper is slightly better, 52.5%. So that was one thing that I saw.
Yeah, but you get 58% from our Series A.
Yep.
Yeah, but then that dilutes in the Series B.
Yeah. And Prosper's also willing to give us $3,000 up front, and you guys total would be 2,500. Those
But
really annoying aspects.
you guys know why we're not giving you $3,000 up front?
No.
You don't trust us? You don't believe in our product?
So if you saw the video, the calculation, the guy said the investing in stages is in favor of the company that receives the investment and not in favor of the company that invests.
Oh, right.
So we're doing this for you guys to have more like equity.
Uh-huh.
So it's not that we did it for ourselves. We could have done the 3 million, but we would have more equity from you guys.
Uh-huh.
We're doing this in stages so you can have more equity than us. So that's one reason why we did it in stages, right?
Yeah, we can give you more money.
Or how about you guys valued us somewhere, and obviously we're going to want to value ourselves a little higher. How about if we put the pre-money valuation just a little bit higher so that our our percentage of ownership is slightly higher to match Prosper Fund. It's only like
I don't care about
1%.
the premium evaluation.
You don't really care about that so much?
Well, as
Okay.
long as our percentage doesn't go lower than 25%, we're okay.
Fabulous.
And no, like I don't want it to go. I don't want. I don't want to change it. Like that's not going to be a deciding factor for us.
It's not going to be a deciding factor.
But still, you have better offers from the other ones on numbers.
Well, you guys wanted our option pool lower. The
Like-
option pool is going to change it all too.
On money wise, you have better option with the other ones. But still, like we're making you guys easier.
So 0.525 by changing cell this one. All right. So if our pre-money valuation were 26.23, our ownership would go up to 52%. That's just slightly better.
And our pool stays down enough. Because then you would beat out the Prosper in the option pool.
11.4, they're above 10%, still there.
Mm-hmm.
The option pool is still at 10% after the Series B. All we're doing is revaluing our company by
Can you
100.
put zero? Can you put zero? The decimal point for percent ownership for Series B.
Yeah. Ah, you caught on to me. Okay, there we go. 52.5. Oh, I need to modify that. That's not right. 52.48. That's probably close enough, though.
No, I want to know the information.
You want to know the information? Oh, on the cases. So if we just do the pre-valuation at $123,000 more, it's probably not worth even talking about. Our our salaries right now are probably not worth discussing that. But is that something are we asking too much there?
Yeah, I just don't know if that's something that we can change. If that's like a definite or.
That's just how much you're valuing our company at, right?
Right.
I mean, these guys are valuing our company at $4.5 million. These
Hey,
guys.
Griswold, where did you? Do you remember where that was in?
The what again?
The pre-money valuation.
My reasoning on that was only on the revenues. I based the pre-money valuation on revenues and what they have done, not what they think they'll do. Because companies like Mumata, there have been other ones before them that have reached the peak and then they've gone down. So they were thinking they were going to do good. But they weren't.
Yes, but
So that's why I put the 2.5. But we can, I don't know.
in the case, it did say though it was at 2.5, but just to go up to.
I didn't hear that very well.
So it's
Chelsea,
got.
say it again.
Oh. It started out at 2.5, but it was supposed to go up in the next year to 8.
It was supposed to be, but it's not. It's
The markets crash.
Yeah, you're not sure about it. So
Right. But anything more than what we did this year is going to be what you would base it off of.
And the 2.5 million you guys are on the revenue, it's the first time you're having that. You're reaching $1 million. Because before that, you were in the thousands.
only a 3-year company.
If you see the
Exactly. It's only a 3-year company.
Yeah, so if you guys are professionals coming in and saying you're going to help and give us advice and doing this and that, it should rocket, right?
Well, our pre-money valuation is what it's going to be no matter what. If we were to go in there to not.
Well, it's going to grow. I mean, it's had growth so far.
Right.
Well,
And we also we also have 2 other professionals, and Prosper is doing very well, indicating that we're worth nearly twice what you're saying we're worth. So that should say something about our potential.
Yeah, but do you guys have like orders that are waiting for you to do, or
We don't know that.
free stuff?
And without that information, we can't offer more.
No.
I mean, we don't have that information, though.
Yeah.
In the
That's. I mean, I don't know, Madison. What do you think? We can go a little bit higher, 26 something. He said.
and you're still only
because
giving
that's
us the 3 million, or the 2.5 million.
Yeah.
So we can do like
I'm
some.
fine with going up that much.
We can do some small changes, I guess, but we cannot go more than we can.
Because we're still giving them the same amount.
Mm-hmm.
Oh, no. Now you changed it to 27. 2.7.
I was just rounding it up.
I don't want to round it up, though.
You better control Z that.
It's our money.
It is my money. Even though it's the same amount, it's a different ownership percentage.
Okay, so the ownership percentage would change from we were at right now we're at 20. Your ownership, the final ownership at the end of the Series B is 37.11%.
The pre-money valuation was 2626, I think.
2626.
Something like that, yeah. Because we had 10.01% ownership.
Okay, so you usually had 2,500, right?
Right.
Your ownership was at 38.46%. And let's just say, if we change our percentage of ownership just slightly above what Prosper Fund would give us at 52.5, although they're still giving us everything up front, $3 million, which can give a potential for greater growth.
Yeah, but
right
look
away.
at our post-money valuation for the second time.
There is no second.
No, for Series B, I mean.
Okay, 38.
We didn't get a Series B for them. It was only just one series.
I know, but that's our
4.46.
post-money valuation. Your post-money valuation for Series B for us is higher.
Oh, I see what you're talking about. Okay.
So after you get all of our money, it's going to be valued higher
Right.
than them.
So let's just put this ownership at 52.5 is what they're given. So what if we just put 53%, half a percentage more, not that big a deal. I'm going to goal seek this to the value of 0.53. We're going to change the pre-value there. So if it's 2673,
It gives us 9.91%.
no, 37.14%.
He has the pool above you.
Oh, okay, sorry, that's
Yeah.
why I'm confused.
So all we'd be asking if we went with that would be that minus that, a 1.32% difference. It's huge. At 2673.
No, but we need our ownership pool above 9% as well.
Oh, you caught on. Darn it. No, just kidding. Okay, yeah, we can
Because I was
change
like,
this.
why am I fighting for this to be above 10%? I'm like, I know there's a reason. Think
You're
about
good.
it.
10%. Okay, so we're going to change this to 10%. We'll go seek that. And if you guys don't mind putting these in your own spreadsheets, just to double check, I don't want to get us into trouble. To value of 0.1 by changing the value of the pool at the beginning.
No, we want to change.
Well, it doubles.
Evaluation.
It doubles, so we've got to. Oh, the money valuation. How is that even possible? Let's see here.
So you're going to change that by, you're going to get goal seek that to 10% by changing your pre-money valuation.
All right, we'll do that. We'll see what that looks like. It won't let me. It wants to round it up, so.
So put 0.1001. Usually
Sorry.
more particular.
Okay, so you're saying change this to goal seek of
0.1001.
001. Still 9.96. Let's change this to 2640. 45. 40. 35. 30. 25. Is it
Okay, we can do that.
52.5? That's the same as Prosper. What do you think, Elvis? Chelsea?
I'm watching this. The screen froze for a minute there.
I can see your screen, but from what I'm hearing, I think it looks good.
I like that because it's above 50 on each one of them.
Yeah.
And our evaluation is just slightly bigger. We're right at. It's pretty specific. What does Madison and Grizel think? Can you?
I'm good with that. Grizel, any comments?
I think that's good for negotiation.
Yeah.
On things that we have no idea what we're talking about. Somebody else's company. It's better than Prosper. It's better than Astoria.
Yeah. Well, I think they all have their perks, but I think that we can work with this.
Yeah.
Yeah, I agree.
And the primary reason is because you guys are just, they have their perks, and we could probably go with any of them, but we like your team, so we'll go with it.
And because we maintained a friendship with one of their team members.
Yeah.
Hello.
Okay.
Hello.
Hi,
Can you guys hear me?
Yeah.
Okay.
Clearly.
Yeah, I'm okay with that.
Do we need to go over the questions real quick from the discussion board,
Yeah, let's just go over them real quick.
Yeah.
like super fast, because I have kids crying out there. So which team had the highest pre-money value? See, I don't understand that. How are we supposed to? Which team had the highest pre-money value? Where did team fail?
Which team had the highest pre-money valuation? You guys did. We had the low, and then GPH had the lowest.
Yeah, I guess that's where.
Which team showed extremes in performance and asked what happened? Choose teams that showed extremes in performance and asked what happened. Okay, on to the next question.
Yeah.
The student from, okay.
What were your guys' goals?
Are we supposed to share each other's goals now?
Yeah.
Yeah, I guess so.
Huh.
Which I feel like we went over the goals in the negotiation.
Right. Well, yeah, because we
our option
told.
goal to stay in between 10 and 20%. We wanted to stay in between. It was 30 to 40%, I think.
25 to 40%.
Or no, let me tell you correctly.
In the ownership?
Yeah.
Yeah. It was 20 to 40%. Board seat.
You guys just wanted to have one in a voting and one non-voting.
Yeah.
Yep.
And how important is it still? Pretty good, I would say.
Yeah, that's an important question for you guys.
Does Muache fit your investment focus? Yes.
Okay.
Okay.
And our side, did the co-founders see the things the same way, or were you focused on other interests? Write down the order of importance. I think our order of importance was our pre-money value, and then the option pool.
Well, for the assignment, we needed a minimum of 2.5 million, which is what we got.
Yeah.
Uh,
Deal terms. I mean, we got what we wanted. We got it.
what post? Sorry, go ahead, Chelsea.
No, go ahead.
I'm looking at the submission, the pre-discussion submission. I'm just kind of running through those numbers. What post-money valuation are you targeting? I think that we got exactly that. We got the 10,000.
Yep.
Mm-hmm.
What size option pool? We wanted 12%, but we thought the smaller the number, the better, because it would give our ownership higher number. So 10% was better than 12%.
Yeah.
What board composition are you targeting? Oh, note the following should not include non-voting board observers' position specifically. How many board seats will be filled by DuPage employees? How many were filled by you guys?
One.
Two?
One.
They had one. We
Yeah.
had three
Yeah.
plus
One.
one.
One voting board member.
Yeah.
Right. So, is that right? Are you sure? I thought it was two.
No, they had
So the other
other
guy
on the
was in a
board, but
non-voting
only one vote.
capacity.
That's right.
Yeah.
So we wanted one, and we got that. How many board seats will be filled by Mumate co-founders Maxwell and or Taylor? Two, and we got that.
We got three.
Three.
Oh, we did. How
Yeah.
many board seats will be filled by independent directors, individuals
One.
acceptable to both?
One.
And we got that. And please
Okay.
specify any other terms that you're targeting. And you guys were okay with Maxwell being the CEO, so
Yep.
we got that too.
But
We
not-
were happy.
Not as permanently.
Right.
Okay.
We want him down one day.
Well, you said if his performance wasn't good.
You guys know it's a chick, right?
So
Okay.
that's what we got.
Ask the Mumate side, how did Astoria and Prosper term sheet affect your negotiation strategy? We had to figure out from your sheet what was most important to ask for first. We had to figure out. We had to prioritize. But we had 15 minutes. So. How did the VC go about valuing Mumate? And you guys said that you just took our revenues and went off
Revenues.
Yeah. That was the main. And like we didn't base it on the future.
of that. Mm-hmm. Just your past, the historical data.
More on realistic data than what
Yeah.
we were thinking it's gonna be. So
Did you guys have a spreadsheet on how you evaluated us?
nope.
Okay,
No.
that's fine.
What have you learned about bargaining tactics? Should Mume disclose that they have other offers?
Yes.
We're glad you did that.
Do hardball tactics make sense? Sometimes.
It depends on who you're working with and their tactics.
Right.
Yeah.
Yeah,
And what you
although-
want to achieve.
Yeah, although I wouldn't be surprised if companies like in the real world wouldn't disclose that at all. Just talk with you, and we'll call you. We'll let you know if we can do the deal or not, and then we'll do it.
Yeah.
Key takeaways. Terms allocate economic and control rights.
I think keep takeaways. That was the thing.
Yeah.
Think win-win. If you want to have a good agreement, make sure that the other side or the other party wins as well, and it's not just you. So, and we try to do as best, like to go in stages and not just one round. So, I don't know. That's my thoughts.
Awesome. Well, did you guys like this one? This is a lot different than the last negotiation.
Well, one thing that I didn't like so much about it is they weren't really specific on exactly what we wanted.
Yeah.
I mean, we kind of had to look at it and say, okay, well, how much do we want? What kind of ownership do we want? And we thought, well, we probably want at least 51%. We want over 50%, but they didn't really specify some of the, they didn't give us numbers. So.
Oh, okay.
Yeah, we did not have a lot of numbers. Only a few. We don't know how they got their numbers. Is the thing.
We were the
Victoria,
opposite. We had some numbers.
um,
It wasn't specific. It was like 25%, 50%
um,
or other numbers, but
Gotcha. Awesome. Well, okay. So one of us has to send in the information that we came up with. So I can do that if you guys don't mind, or Adam, whichever one.
That's fine if you want to do it. You got all the numbers, right?
We
can go over them again
no.
and make sure we're on the same page if you want.
Well,
It's going to affect all of us.
will you email me that spreadsheet so I can copy them into? I'll just do it that way. I'll copy them into my spreadsheet.
Okay. Do you have that poll up right now? Do you just put numbers in the poll, or do you? Because you could even share your screen, and we could do it all right. We could do it right here, right now,
Oh, okay.
if you want.
You guys are gonna do that. Are Griselda and I good?
Yeah, unless you want to verify that the numbers are right.
Well, it's the numbers that we have on the spreadsheet.
I think I've got them right. We've got the pre-valuation number here, the pool, that number.
I'll pull it up real quick. I think we're good.
Just
yeah,
all
if
of
you keep that open, Adam, I'll do some updates on my sheet as well.
Yeah, and before we submit it, you might make sure in your spreadsheet that my numbers actually are the same. Maybe I've got a formula that's wrong.
Oh yeah, of course.
Okay, so our team number is 7A and 7B, right?
Yes.
Yep. Oh. I think so.
Did you reach an agreement on an investment by due page? If no, you can ignore all the questions below. So yes, we did, right?
Yes.
Yep.
How much capital will DuPage invest in this round?
No. Hey.
So
1250.
Okay, so 1.25 million. What post-money valuation did you agree upon? That was a 10 million, right?
After the Series B.
I don't. Okay, so I wonder if it's supposed to be. Let me look down here, make sure. How many board seats? Specify the terms. I think it's just one of the end results.
Yeah, it just wants the end results. But in our email, it says that we don't have to that you guys will.
Yeah, you go ahead. Yeah.
Yeah, if you guys want to take off, that's fine. I just thought
Okay.
we might want to make
Yeah.
sure that we.
No, I think we're good. We're
Bye.
good.
Oh, for next week. Who's doing the group leader thing next week? Or
I can do
we
it.
don't- Did you do it last week?
I don't know. I don't care.
I guess it's not that big of a deal. Who does it?
Yeah. We all talk anyway.
Yeah,
I can set it up. I'll set it up and send it out. How's that?
that's fine.
Okay.
That's
Okay, but
second, either way.
I'm stuck on this question because I don't know if they mean in this round total or if they mean in just Series A. Because it doesn't ask me anything about Series B later.
Can you share your screen?
Oh, okay, yeah. Do I still have to record this? I'm gonna stop it.
No, you can stop the recording.
Okay.